Welcome to the channel. My name is Nick and I'm a top podder on TradingView with over 260k reputation points, and every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel so you don't miss out on all this free content, and I will see you on the charts. In today's video, I want to speak about gold. Why do I want to speak about it? Because at the moment, the price action is quite interesting. So as usual, I will be performing a complete multi-time frame top-down analysis first. I will be covering the technical aspect of this market. Then we will go and check what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on this commodity. Now, starting from the monthly time frame, we have a quite strong impulse to the upside, followed by this complex correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how first the market has tested this 0.618. Then the market tested it once again, and at the moment we are ranging around the 50% retracement. Now, usually the market likes to move step by step, touching the Fibonacci levels, which means that at least at this moment, we could expect the market to reject the 50% to the upside. But it seems like, at least at the moment, since we only have 2 days and 9 hours to go before this monthly candle will actually close, it seems like we will get a close below this 50%. Going down on the weekly time frame, what do we see? Now here on the weekly time frame, we can see that all this area is extremely strong demand for gold. In fact, we can see that when the market melted inside of here, it created this huge rejection wick, which means that all this zone is now extremely strong weekly demand for gold. And since the market is at the moment slipping inside of here, there is good probability to see an accumulation phase before then the continuation to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. We go down on the daily time frame, and what do we see? Now here on the daily, we can see how all structure is currently bearish. In fact, we can see how the market tried creating a double bottom here. However, it is currently failing. And if this daily candle here, which will close in 8 hours and 53 minutes, will actually close below this support, at that point, this will be previous support turned resistance. And obviously we can still not be looking for any kind of high probability opportunity, because the best opportunities come when all the directional time frames are showing the same direction. So when the monthly, weekly, and daily are showing the same scenario, which in this case is not the case because monthly and weekly seem bullish, but the daily here is clearly bearish. So we have to wait for the daily time frame to once again provide bullish structure. Now, that would only happen in this case if we get a break back above this resistance. But before I show you that, let's first go and see what we have from a COT perspective. So what the non-commercials and the biggest speculators in the market are doing. Now, what we can see here is that lately net positions have been increasing. We went from having 162k net positions all the way up to having 187k net positions with 296k longs and 109k shorts. However, in the short term, we are seeing a decrease in the net positioning from 216k to 187k, with 9.7k shorts added with the last report and 10.3k longs getting closed, which means that at least in the short term, we are seeing a weaker gold, and that is clearly reflected already in the price action. Therefore, only if we will see a break back above this previous support, which is now term resistance, if we will get a close below it in 8 hours and 52 minutes, at that point, we would have once again a bullish market. And after the break, we can expect a retest of this structure level. And that is exactly the area inside of which we will be looking for a potential setup with students. And the way in which we will be doing that is being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So after the break on the retest inside of here, we will be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for this potential setup to the upside. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.